Hello, good evening. This is Oral David here, and today we'll just have a brief look at what candlesticks are all about. In fact, this is very exciting for me because I started off my journey as a trader, and the first thing I started learning was about candlesticks. So, if you are new to the markets, or even if you are a little bit, experienced in trading, you should be knowing what candlesticks are all about. Okay, so I'm going to just give you a brief on what candlesticks are. So, candlestick charts, they are, a kind of figures that look like this, right? And why do they call these candlesticks? Is because they look like a candle. And it was initially, it was formulated, or it had been introduced by the Japanese. Okay, and that's why we call it Japanese candlestick charts, right? So a candlestick chart is representing one period. It could be for a day, it could be for a minute, it could be for half an hour, it could be for 60 minutes, it could be for a week, it could be even for a year. Okay, so it's representing price action for a period, right? So during that period, what could happen to price? Price would have moved up, it would have moved down. So the lowest it would have made will be at this point. So we call this as the low. Okay, the open would be somewhere here, and the close would be somewhere here, and the high would be here. Okay, so this is the high. So the market opened somewhere here, it came down till here, moved up all the way till here, made a new high, and then closed at the this point. So that is called the closing price. So this is what candlesticks are all about, and they actually give you a very a vivid picture of what happened in the market. So usually, if the close is lower and the open is lower and the close is higher, basically we call this as a bullish candle. Okay, and they on the computer screen, or wherever you see your candlestick charts, you will see shaded as green color, right? Then we also have another candlestick which we call as a bearish candlestick. Usually you will see it in red in your computer programs. So usually the low and the high remains the same, but the open will be above and the close will be below. So the market opened high, went made a new high, came all the way down and closed lower than the open. So this is what we call as the close of the candle. So this is basically candlestick charts. Now if you are going to put so many candlestick charts together, if you see a lot of red candles, what does it mean? That market selling, there's a lot of selling pressure. If you see a lot of green candles, what does it mean? There's a lot of buying pressure. Okay, so candlestick charts can definitely be used to get an idea of where the market is going to go in the future. It also gives you an idea, very clear idea of what has happened in the past, and it can be used to get a rough idea or to forecast where prices are going to go in the future. So this is what we're going to talk about on the 23rd in our workshop. So you're welcome. Please do come for the workshop on the 23rd at 4 o'clock. I'll see you there. Thank you. Bye-bye.